Hello everyone, this is Irina Shamaev, your mortgage broker, and today I would like to discuss about the interest rates and the purchasing power and how they affect each other. Of course, everyone aware, for the past year the interest rates dramatically increased, and as example, if at the beginning of the last year the interest rates were various between 2.5% to 3%, by the summer we already been closing between 4% and 5%, and by the end of the year the interest rates, some of them, they were reaching up to 7%. So, but how does affect you exactly in your buying power? With rising interest rates, your purchasing power goes down. And as example, I have a graphic I would like to share with you. So let me just grab the graphic. I want to make sure everything you can see the numbers. So if you look over here, let's say the borrower will qualify for a purchasing price 600,000 when the interest rates were near 4.5%. When the interest rate rise at least for 1%, which is right now the interest rate's at 5.5%, then the same borrower cannot qualify already for the 600 purchasing price. He has to reduce his purchasing power to 11%, which is near 535. So this is show you as example how they correlate with each other. But please don't get frustrated. The lenders, they have a way out of those high interest rates. You probably have heard about it as a buy down interest rates, which is the lenders willing to reduce your interest rate in exchange when you're paying discount points. Basically, it's some percentage of your loan amount in a dollar amount that you pay in order to reduce your interest rates. So two different styles or options exist. The standard reductions, it's basically when you are able to use your own financing or maybe the seller credits, and in exchange to pay the points to reduce your interest rates. And like I said, this is permanent reduction, and you can use either seller credits or your own funds. And another option, it's just become more popular recently, maybe within last few months. It's called 3-to-1 buy down. Maybe you've heard 2-1 buy down or 1-1 buy down. So how those program works? Basically, let's say if the interest rates, let's make it simple, 7%, and you decided to use seller concessions, which you got and a pretty good chunk of money you can spend to those programs, and you decided to go with a 3-to-1 buy down. Basically, how this works, if the interest rate 7%, the first year your interest rate will be 3% lower than the note, which is 7 minus 3, it's going to be 4%. So the first year you will closing with the 4%. The second year it's going to be lower 2%, which is instead of the 7 is going to be 5%. And the third year it's going to be 1% lower, which is not the 7, it's going to be 6%. And on the fourth year it's back to 7%. How is this actually beneficial to you as a buyer? With the lower interest rates, your monthly payments will be lower, and it'll give you opportunity to have a smaller payments originally for the first few years of the loan. And hopefully with the next few years the interest rates will go down and you're willing to refinance to lower the interest rates permanently. Just in case if for the next years the interest rates not gonna go down anywhere, so you just still stay with your 7% until the market will drop. So the benefits of these programs, it's a lower monthly payments for your mortgage for the first few years of their loan. But disadvantage of this, that you cannot use your own funds. So basically you can use only your seller concessions, and depends on the program, 3-to-1, 2-1 or 1-1 buy downs, it's going to be depends how much the seller credits you have. The more you have, the longer you can use those programs. And buyers, if you're on the market right now, please do not wait, do not postpone the purchases, because we are on a spring market right now. The buyers, they becoming more active, they start shopping, you're gonna start seeing multiple offers. It's gonna be harder and harder to get the seller credits. So if you're on the market right now, please hurry up in order to get the best deal for financing. And if you have more questions, reach out to me, your mortgage broker, Irina Shamaev. Have a good one. Bye-bye.